Hey listeners, this is Alex, your host of EOA Entrepreneurs of Asia. After more than a decade of venture building, bootstrapping, scaling, and now investing in Southeast Asia, I sit down with founders, investors, and entrepreneurs who can share their hard-earned lessons and stories for the benefit of the Asia ecosystem and beyond. Chong Siong and I are both Rocket Internet alumni, but his experience spans across the Middle East to Africa and Southeast Asia. Chong has managed multi-million-dollar budgets for Lazada, to working for listed companies in e-commerce, building a crypto startup, and working for a Y-Combinator company. If you ever wondered what it's like working for YC or Rocket Internet, this is a good episode for you. We discuss the differences between the two companies and some of the values that have worked out for them. We also get to pick Chong's brain on how to set up a performance marketing team in Southeast Asia and why he thinks many growth-oriented startups waste too much money and funding on marketing. Later on, we get to talk about Chong's time working at Tendered, a YC company, and the difference in work cultures across the Middle East, Africa, and Southeast Asia. The final section talks about the state of crypto and the rise of NFTs. This is an exciting episode you don't want to miss, so let's dive in and listen. Chong Siong, welcome to the show. Thank you for your time today.
Thanks for having me.
Yeah, so this is take two, but we'll start from the beginning again. So Chong, you started your career as a trader. We both have a very similar background where you were doing some trading back in 2011 in Malaysia, and you also did some M&A work. And then by 2013, you were picked up by Lazada to do performance marketing. So why don't you tell us a little about your trading experience and then how you got picked up by Lazada?
Right. So the trading thing happened actually for many years after I graduated. I was very interested in the markets. I was mainly trading equities and commodities. So I think the role at Lazada kind of was a natural transition because, we worked a lot with numbers. So I still remember the tests that I had to do in the office. It was quite cool. I went to the Lazada KL office, did the test, but the whole process was really quick. I got called to Bangkok within 2 days after the interview happened. So it was my first experience at Rocket, right? Rocket speed. And I never had a company, completing hiring within 2 days and expecting you to get over there. So I think that was pretty cool. So my experience with Lazada, again, was my first experience handling, budgets worth millions of euros. And I think at that time was one of the largest in the region. I was mainly focused in search engine marketing with Google, with Bing, if you remember Bing.
Bing, yes. Yeah. And then what we just discussed just now is that what's interesting is Lazada was just forming this centralized marketing function. Typically, Rocket has a centralized version from Berlin, but then you still have to regionalize it. And Lazada decided to move the marketing performance team that manages all the countries for Lazada, performance marketing from Singapore to Bangkok. What was the reason for moving to Bangkok?
Well, I think it was mainly on the cost perspective, right? Because, the marketeers before me, they were actually moved from their own countries. So we had like team members who were already working in Lazada Vietnam, for example. They were moved to Singapore. And I think shortly thereafter, their training and Lazada decided that, okay, I think we're going to move to Bangkok. And so they did. And so the Lazada office in Bangkok, Thailand was pretty huge. I think at one point we had like at least a couple hundred people in the office.
Yeah.
Yeah.
And you were hired as which number was that? The first 10, first 20?
I was pretty late in the game, to be honest. Like, I think Lazada was already operating like a year plus, when I was hired. So I'm not really an early employee per se.
For the performance marketing team?
For performance marketing team, I believe there were one or two before me. I think my boss back then, he was managing marketing, and then, it grew because they had to spend, all this budget that they received in order to grow. And so he started to grow out his team. And so for the search engine marketing team, we had 6 people. And then, for social media marketing, I think they had another 10. And then, it was kind of like a very clear division that they had. They had CRM team, they had search, they had Facebook, and then they also had like the on-site team. So it was pretty huge team, to be honest. And I think back then it was probably one of the most advanced setup that I've seen.
Yeah. And back then also we were discussing before that there was no tools that we see today, where this is a very mature market. Google has perfected everything you do. Just click buttons and you're done. But I think back then, you were running massive amounts of spreadsheets, macros, and this kind of stuff, right?
Yeah. I never had any expectations for the laptops that I used back then. It was until I joined Lazada and I realized that my computer was not up to par. And we've always had to, rely on a very good laptop. We would request for computers that could, play games because we knew that we were going to play games too. But it was mainly to use Microsoft Excel because, we would deal with hundreds of thousands of rows at any given point in time.
Yeah, and what people don't know is that the secret to Rocket Internet was just using spreadsheets to build billion-dollar companies, essentially, and working really hard and fast, right?
Google Sheets, to be exact. All our budget and all the planning happened on Google Sheets.
Yeah, exactly. You run out of rows, it slows down, then you have to make more sheets. Yeah. So then I have two questions about that. What was the cost factors going into it? It seems that you're having to pay a higher package for people in Singapore. And essentially what happened is you would pay a lower package in Bangkok, but for the same talent? Is that how that worked? Or what was the cost factors that made people want to switch?
Well, I think in general is this, right? Online marketing was still pretty new back then, and they realized that they had to train everyone from the ground up. And so if you're going to train everyone from the ground up, then there is no reason for you to pay a premium, right? Like a wage premium. True. So I thought that made a lot of sense. Yeah.
Yeah. I mean, it makes sense for the region because in terms of quality of life, retail scene in Bangkok, right? It's pretty decent. But essentially what happens is that you take advantage of this regional difference in the market. So my follow-up question then is, if there are new companies in this day and age, 2021 and beyond, is this a good structure to follow, advice? Because you see a lot of people raising tons of money. They probably ended up starting in Singapore because either that's where the money's been based or where a lot of the foreign talent wants to kind of go. Does it make sense to kind of follow Lazada's footsteps? And, in my previous episode I did, it's kind of stays with the tech team too, right? The tech team started in China, moved to Philippines, and moved to Vietnam. Then there was a few other countries that they opened up and then ended up closing down, and Vietnam still persists. So there are like these regional advantages you can take up. Would you say from a marketing standpoint that still makes sense today? Should new companies do that?
You mean should companies centralize in a cheaper country, right?
Yeah, for the Southeast Asia region specifically.
Well, I think that still makes sense, money, right? Because if you look at all the pitch decks today, when you ask the founders, what is your growth model? And, how are you going to spend the money? They would say, okay, 60% is going to marketing. And by marketing, you mean you're going to spend it on Facebook and Google, right? So I mean, 60% of what you raise goes to Facebook and Google. And if that is still true today, I think that means that you need to have a lower cost structure, right? Because you want to allocate the majority of your capital towards growth.
Yeah. I mean, does that still make sense with a lower cost structure? Yes. But then it's almost like a Red Sea now, right? Mm-hmm. Everyone's competing for the same talent, but also the same user base. Mm-hmm. Is that enough to make a difference?
I still think that the centralization of skill set is still really important, right? Because what we used to do at Lazada is that we do a lot of cross learning. So a lot of best practices that we had, in different countries, we would share them, and that's how we would learn and grow, right? And that's what Rocket did for us as well. They would have periodic calls with us to share best practices, how you would optimize your campaign and so on. And I think today there's two main problems with marketing, right? Especially digital marketing, because everyone can do marketing these days, apparently. And
correct.
We still find that there's a huge shortage in terms of getting people who are very experienced in performance marketing. And so a lot of my colleagues and friends, they still have to train people from the ground up. And if that is still the case, today, like it was back then I don't think that the model needs to change. You're going to have to allocate a lot of time to train people. And so they all have to be in the same place anyways, right? even if you want to pay like 2 or 3 times the market rate today, you wouldn't be able to get the talent anyways. So, I mean, that's the thought behind it.
Well, I mean, well, put it this way too. Then, how does, especially with COVID, does remote change this dynamic now? And also the amount of capital flowing in the market, right? It's just crazy amounts of like people are raising higher and higher amounts at seed stage or early stage, and there's more interest. There's more unicorns popping up and more exits on the horizon and a lot of IPOs, right? So that brings a whole new wave, that next chapter that we're seeing. This kind of macro picture, does that change what you're talking about or no?
I don't think it should change much because of the structural problems with the talent. I've not seen any changes, like it's not like there's more people becoming marketeers these days. I think the number of people that are moving on from being marketeers to being founders are more compared to new people coming in, specifically wanting to specialize in performance marketing. So I still think that there's a huge shortage in this area. And if your company is going to be, GMV revenue focused and you need to grow through marketing, I think you understand that this is going to be a major bottleneck.
Well, tell me this. I mean, any consumer facing company these days, is that not the case? You're going to be GMV focused and revenue focused? That's
true. But you see, so recently, my recent company was a YC funded company, right? They had a totally different approach. When you compare with Rocket, for example, Rocket is very focused on speed as well as scalability, right? But what founders are told in YC is to focus on doing things that are not scalable. So they usually cite this example of Airbnb. When Airbnb started, it got a pretty slow start, and they found that users were not uploading great pictures of the accommodation. So what the founders did was to fly over, meet the guys who were renting out these accommodations, and they would bring the photographers with them and take great pictures. So this is an example that they quote repeatedly. We do things that are not scalable. For example, taking pictures, great pictures for our users. And I think that is totally different from the Rocket approach, where, you just typically spray and pray, right? Like in marketing, when you reach enough people and a percentage of them comes and buy from you, you're good. Whereas, in a YC startup, what is recommended is that it's better to have 10 happy customers than 1,000 not so happy customers.
It's so interesting, that point, because this is actually the topic I talked about in my first episode for EOA, and that friend worked for Airbnb, and he told that story as well. And I can't believe 2021, they're still saying the same things, right? So it hasn't changed much. I mean, we'll talk about this later, but the nature of YC is changing, though, even though they're saying this kind of stuff. I would disagree a little bit. I think I do agree with Rocket's a very different flavor and style, but on the ground level, when you are on the ground level team starting something brand new and scratch for Rocket, there's a lot of brute force that you do have to do that's just not scalable. What you have the advantages is the capital, which allows you to accelerate, to move faster, right? It's like a volume knob. So especially like in an arbitrage situation like Asia, that money gives you a multiplier effect of hiring cheap labor where you do brute force it. It's not scalable. But with enough capital over time, what Rocket's really good at is operationalizing processes, details, structures, spreadsheets, data, right? Once you layer that on, then you start to make it more scalable process. It just seems to happen very fast because how much money going into it. But when I'm doing it on the ground, though, it was really not scalable. Like the things that you would have to do, like it just doesn't make sense, pulling the buying team to doing warehouse, stock counts when they should be doing buying, it's manually uploading payments one by one because the bank doesn't allow you to do bulk upload, right? So I think there is a mix of both. It just feels a lot faster because you have much more resources than say like a YC company early days where just raised a few $1 million. So
Well, I think there is a reason for that, right? Because for the most part, YC again is based in the US, and US
Yeah.
being a country that it's pretty expensive to operate, to hire new people for your startup, right? So in general,
Yeah.
the cost of growth is pretty high. Compared to the rocket model, for the most part, rocket
Yeah.
launches in really cheap countries, Southeast Asia, Eastern Europe, for example. And so it's okay, for you to just spend money and acquire
Yeah. True.
customers,
Yeah.
right? And
Yeah.
and and I think that is why there's a lot of emphasis on product market fit, um, with
Yeah.
YC companies versus Rocket. Let's just find something that works, right? And just spend money in that process.
So we're in a different chapter in a new cycle, right?
Hmm.
There's more money than ever. There's more exits, like we talked about. Things are getting bigger, and there's a whole wave of talent that kind of went through our first wave of the 10 years. Uh, in this kind of new cycle, though, do you feel marketing is at the point where it's going to be similar to more developed markets where everyone's fighting for the same user bases? Like, as a new marketer coming into the region, how do you think about customer acquisition? How do you think about LTV? How do you think about CAC? The customer acquisition cost. Is it going to be? Are we at the point where it's very similar to the West now, where we should be focusing more product market fit, or is this still about raising too much money to get that kind of capital advantage because you could buy things at a cheaper rate and close that arbitrage?
Well, I think it's moving closer to that as we
Yeah.
speak, but I still don't think that in terms of cost comparison that Asia is on par with the West. I still think that there's many parts in Southeast Asia where you can still have like a positive return, on every dollar that you spend. So I still think that is
Mm.
possible, but I think, coming back again to the product market fit, whether there is a demand for the
Yeah.
services, the
Correct.
products that you're actually marketing. I think that matters a lot, right? Because that actually proves or sets the benchmark for your conversion rate. So if you sell something
Yeah.
shitty, um, yeah, you're gonna have problem marketing it. I think in the long run, maybe the beginning you're gonna have customers coming, but also think of it from the returns perspective, right? Customers are gonna return your product, or they
Yeah.
may not
Correct.
recommend someone else um, to your service or product.
Yeah. Well, that stickiness factor just speaks to overall LTV, and you have to run the
Mm-hmm.
company for a while to do that. But what happens is that, like, a lot of companies in the region, Southeast Asia, especially if you're very good at storytelling, having a narrative, right? Because capital is chasing alpha, right? They're like, institutional money is squeezing into VC, and it's a tiny amount, but it's like, for us, it's like crazy amounts of money that we've never seen before. But what's happening is, right, these guys will just, because of nature of Southeast Asia, you just buy your growth, and then they try to work backwards to a product market fit, right? Do you agree this is what's been happening, or do you think there are people who are actually finding real product market fit, or is it a mix?
I think it's a mix.
Yeah.
When you have that
Okay.
much capital, immediately after you get the money in bank, your investors will expect growth, right? And these days, VCs
Yeah.
expect a 300% year over year growth. So, how much time do you
Yeah.
actually have to really figure it out? By the time you
Yeah.
figure out product market fit, you may not have the amount of growth that the investors want. And, you don't want to be the guy to tell your investor that, hey, I don't think I can hit this year's target. So I think a
Yeah.
lot of
Yeah.
companies now they start like really lean. That's what I noticed. A lot of founders,
Mhm.
they come from startups themselves, and
Yeah.
many of them have like really healthy stock options, which they manage to, let's say, um, cash in. And many of these guys now,
Really?
they're starting. Yeah, I mean, like in Lazada, for example, you have a lot of people who have left, but
Yeah, it's true.
they cashed in pretty well, and then they went on to start their own companies. But you don't really
Yeah.
hear, that they are raising money, from the get go. They want to build something first, and then they start to raise. Um, so I think that's what's happening, as an example.
I mean, at the higher levels, if you were the top guys, they raised too much money, probably, right? Like,
Right.
Pierre, who left, right? He raised a crazy amount of money for
Mhm.
his e-commerce idea. But then, yeah, I think you're right. If you're like kind of this middle kind of guy, you kind of understand you need to build something of value first. have a proper MVP, have some clarity before you kind of raise. And I think if you do have that, though, I do feel these days it's quite easy to get money if you have the right traction. So, but it's where we are in the cycle.
Well, I think this is healthy, right? Moving from just speculating, not having like a real product market fit, towards having something concrete, like maybe even like many of the companies that are raising these days, they already have like revenue going for that. It may not be huge amounts of revenue, but I think they proved that the business actually works or could work and could have a much bigger, TAM. So, then they managed to raise based on that, right?
Well, let's tease it out, right? So I've been recommending to the companies I angel invested in, it's kind of like what you're saying, looking for clear product market fit, looking very design centric, talking to your customers, right? So they kind of have that element, but I'm realizing that we're in a part of the cycle where it's what we talked about. If the performance marketing is giving you that return, you should just maximize it. So go out and raise way more money, put it into those channels. And if it's a strong product market fit where no one's serving it, you will get to the scale where you can attract even more capital, and it kind of comes self-fulfilling. So do you think this is the correct strategy? While yes, it's healthier to do product market fit, and look at it from a very value creation perspective, a wealth creation perspective. I don't think you can ignore where we are. If competition comes in and copies you with more money, you're kind of be in trouble, right?
Mm-hmm.
So do you think it's valid to kind of do this?
Yeah, I mean, going back again to the basics, right? Like if you have it all worked out, you should definitely put your foot down, on the gas pedal and go all the way. So I still think that it is the right strategy, simply because if you don't chase growth, then what are you chasing, right? Because when you raise money from investors, that's what they expect. If you don't expect to grow, then, just start a small mom and pop shop.
Well, it's more if you attract the VC type mindset, then they expect growth, of course, because especially these days, with the amount of money coming in, it means the amount of AUM that these VCs are managing are also increasing, which means tiny amounts of money don't move the needle anymore. So it really doesn't matter. So it does kind of mean you have to put the money to work. That part could be a bit unhealthy, though. I get that it's a bit of a moral hazard, right, where it could get out of control. At what point do you think that gets out of control?
Well, I think even now, right? So there are many examples. When you talk to investors, when you I do a lot of consulting for other companies as well. And then when they talk to the investors, okay, so what sort of GMV should we be recognizing? And they seem to point at that direction where the highest that you can, right?
Yeah. Okay.
So I think it's just like, it's becoming like what you mentioned, right? Basically, I don't think there's a word to basically describe it, but I think it's becoming like a beauty pageant in itself, because as a VC, you just want to sell it the high valuation to the next VC.
Well, that's like the Ponzi scam element. This is like the financial engineering element of a lot of noise coming into VC. Like you don't have like these very founder-oriented VCs. These are just guys looking for quick returns, right? Or they want paper returns to raise the next fund. So there's a moral hazard that if you so another question is like, how do you know the founder really knows he has something that's product market fit? And also product market fit is just not like a fixed thing, right? It's something very dynamic that changes over time as you change the product and you grow, right? So where does that confidence come from the founder side? And then at what point should the founder really listen to the VC to put the pedal to the gas to the pedal or whatever? Yeah.
Well, you have to listen to your VC when you want to raise the next round, right?
Yeah. So I guess if you're playing the game,
because they would be introducing new investors. Yeah, I mean, I would say at the end of the day, it's not like the VCs are holding the gun against your forehead, right? Like telling you what you should be saying. I think it's down to the founders themselves to decide, okay, which is the direction that they want to take. Do they want to push it to the edge, or do they want to do something that is more sustainable? And so, but money corrupts, right? I don't think there's a right or wrong. Yeah.
Which depends on your goals and your objectives, right? So, I guess on a signaling level, if you do that game, you get higher valuations. Uh, Even if it doesn't work out, I think you have the ability to raise more money later on. You have some credibility, right?
Well,
So,
I think valuation is really important, but it's not as important as your cash flow, right? I think with COVID, it is definitely what many people call the great equalizer, because you may have like $1 billion in valuation, but if you have no cash in the bank, no VC is going to line up to put money. I think it's going to be a tough sell. So a lot of businesses then have to decide that, okay, should we try and survive, or should we try to push for an even higher valuation? Does valuation even matter at the end of the day? Or the ability to maybe survive and weather this storm.
Well, tell me about these founders as well. It seems kind of worrying that a founder that you're consulting says, should I be focusing on a certain type of GMV? Shouldn't they be coming to you saying, this is the type of GMV I'm focusing on, and then what do you think? Or is like what's going on? Like, what kind of founders are you seeing these days? What's in the market? What quality are we seeing?
Well, I would say most of the founders, right? They're in the game to cash out. So naturally,
Okay.
then, that is the point, right? Like, if you cannot raise the next round, you cannot fund your growth. Does it even matter? Like, at the end of the day, if you fail in your startup, the question is, where are you going? So you basically have no choice as well.
Well, okay, so that's the moral hazard I was talking about, right? At that point in time, you should really start thinking about what's the real value creation that I've done here. And that means you didn't create something valuable, right? So you should probably pivot to something more valuable, or at least find a way to become profitable, so you have at least your fiduciary responsibilities upheld, right? At least you don't burn more money, that you have a chance to survive, to raise money without dying. At least that's what I think that would be the correct advice to give. I don't know.
I think so. That's why I'm not in a startup anymore.
Well, yeah, you had quite a few adventures, at the beginning of the earliest wave of crypto, right? You were building your own startup. That was really tough. That didn't work out so well. I think you've also you worked with larger scale companies too, that had raised a lot of money and had some great founding teams. Like, I think you worked that way. It was Easy Buy and Yuzu. Those are pretty big corporations, right?
Well, Easy Buy in 2015, 2016 was the largest e-commerce in Singapore. So at that time, I think Lazada Singapore was just starting out, and Easy Buy had the market share. Their main business was actually a very sustainable business, right? So people pay them cash up front, and then they would import stuff from China and send it to the customers, right? So the margin was great. It was a great business. And, they wanted to expand regionally. So they reached out, and I did help them to launch in Thailand. Yuzu was is actually a tech company, SGX listed. And, by that time, when they actually headhunted for me, they were actually in a turnaround phase. So they wanted to turn it around, because, they had issues, in terms of looking for better markets, for growth prospects, right? So they headhunted for people who had experience.
Yeah, so it seems like, were these two companies and also your crypto startup, are they partial reasons of why you're kind of somewhat jaded now to startups, or?
Yes, I would say that. So I can even list it down for you. Like Lazada did well, right? Again, they were acquired by Alibaba. But after Lazada, I went to Easy Buy. They kind of scaled down regionally, I believe, but they also listed themselves via a reverse takeover. So right now they're listed on NYSE, I believe. They merged with this company from China called Light in the Box. So success or not, I don't know, but I didn't get anything, and I know many people didn't get anything as well. And then went on to Yuzu, again, public listed company. I was offered again shares and stuff, the standard stuff, right? But the turnaround, I think, didn't really work that well. They had a lot of legal issues and stuff. Although we had a really strong team, that the chairman, the CEO were all really good people. But, fighting against giants, right? Like, we
Yeah.
wanted to go e-commerce, but, we had to fight against Lazada, Shopee, and all these guys out there. And so it's
Yeah.
a different ballgame, right? Even if you're
Yeah.
public listed, it's not that easy. So, having been in startup and in corporate and so many companies after, I just feel like, does it really matter?
You've become jaded, my friend. That's a very dangerous line to follow. I've seen a lot of guys fall out of the. I think a lot of people don't realize the game that they're playing and they become disillusioned with it. But
Yes.
I think your experience at YC was quite important because I mean, it's like the German gospel of startup versus the Silicon Valley gospel of startup. They're very different
Right.
flavors and different beliefs and what you
Well,
push, right? But
yeah, it's
I mean,
always interesting.
ultimately, I think there's certain truths to. Yeah.
Yeah.
So I mean, like let's talk about your experience at YC. Then I would feel at least working at YC company, Y Combinator company, that should change certain things about your beliefs. That it is possible to create value, get product market fit, and scale it, right? Or I don't know what's the real deal. Is it overhyped? Is it underhyped? They do have an edge in terms of returns, but I think it's because of where they were based timing wise, and also early method is very different than current method. So I don't know. What do you think about YC companies?
Well, YC companies can always raise money. That is why people go for for the brand. Because it proves your ability to raise money. I think that's the first one, right? But the second part I think is really important is that if you are a founder, right, and you have no experience, you haven't worked in Rocket, you haven't worked in tech, I think the amount of training that they provide you, the amount of perspective and guidance and support is really valuable. So maybe because I came from Rocket, I wasn't really able to appreciate, because for me it's always about growth and speed, right? And versus the different values that they preach.
Yeah.
For example, it's better to have 10 happy customers than 1,000 okay customers. I'm like, it's better to have 1,000 paying customers, right? So I'm always conflicted.
Yeah.
But I think the idea behind having like customers, happy customers is that they would preach for you. I think that was what they were trying to get across.
So what do they preach about in terms of ability to scale into a bigger market, or like does YC not care about that, or they think that if the market will sort itself out as long as the product is good enough? Because that's like a number one thing almost any investor in the region here will say is like, of course they care about the founders, but then will this is this worth my like you said, is there a multiplier? Is there any leverage? Does this grow to 100x, 1000x, right? So what is the thoughts around that? Because it seems that if that's what they preach, there could always be this this disconnect of it not actually being able to scale. So how do they resolve that?
Well, I think the first point is that YC invests in a very early stage, right? Like pre-seed.
Yeah.
And so that is why that doctrine comes about, right? Like you have to find product market fit, because by Series A you are prepared to basically grow, right? You kind of found your product could fit, and then Series A is when you really want to push it, right? So I'm not saying we're not going to focus so much on marketing. We're going to focus more on a product. But I think that's where the mindset comes from. That's where most of the doctrine
that makes sense.
Comes from.
Yeah. But now you see YC is becoming global, becoming at scale.
Mm-hmm.
And to me, the way I view YC now these days, like the recent article I saw, the last batch was like 377 startups at seed level. It just sounds like it sounds like a 500 startups now, and they're going to dilute, right? Do you agree with this? That at scale, YC just looks like another 500 startups, and you lose some of that earlier edge you have by being smaller, more focused, and higher quality.
Possibly. Well, I mean, I'm not an expert on the inner workings of YC, right? I just worked in a YC company, and then these were the doctrine that were passed down. to all of us, right? Like, okay, watch this video,
Yeah.
watch that video, learn about product, learn about growth. Um, and most of the time, it actually makes a lot of sense, right? But for much smaller companies, but when you talk about rocket scale type of startups, where you want to grow really, really fast, some of these things that they teach actually holds you back.
Yeah. Yeah, well, and I think there is a very different flavor in developed markets, especially with the competition you face, where if you take too long to figure out your little product market fit, someone's just going to get a bigger user base than you, then figure it out later with money, right? So there is a very different game to be had. And unless you are in a very specific niche that really no one is touching or doesn't really know about, and you could own it and do it really well with a very strong amount of stickiness, like very high retention because your product's so amazing. And then from there, once you're very profitable and growing, then you could jump to other verticals. So I guess it's a very different approach. It almost seems like top down versus bottom up, right? That's what it sounds like.
Exactly.
So why don't let's apply this kind of context from what we talked about in terms of performance marketing to working in a region to YC ideals versus the German gospel ideas. What exactly is Tendered, the YC company you worked for? What do they do?
Okay, so Tendered basically is a heavy equipment rental marketplace, right? So they build this marketplace, and if you're a contractor, you get onto the website, you are able to book all sorts of equipment, like bulldozers, trucks, excavators, and so on, generators, whatever. And they raised based on that idea.
Okay. And there seems to be a very similar startup though that kind of blew up. Is quite infamous, right? Katera. Is that very similar to what Tendered is doing?
It's different because Katera actually focuses on housing. Again, they got funded, I think, by the Saudi government as well as SoftBank. So they're very very big actually.
Also very so it's the same industry, but I guess coming in from a different angle, right?
Correct. Ours is just mainly focused on rentals. It's a pure rental business. It on the surface it looks like a really simple business, but when you dive deeper, it's actually much more complicated. Because again, construction is a very entrenched industry. If you look back in history, right, for the past maybe seven decades, you don't really see much change, right? Like, while everyone has gone online, these guys seem to have not gone online.
Yeah, so that's a very interesting point, and especially with Katera, blowing up. Do you think this kind of construction space is it going to be like another WeWork where it shouldn't be VC driven because the technology does add a premium, but it doesn't scale like a tech startup? Is that what you're seeing, or is it different?
I didn't get the point. So you were saying?
Well, I'm trying to I'm alluding to the fact that Katera kind of blew up. Is this kind of in the construction space specifically with technology, right? You definitely get a premium by using technology, but it might not scale like a VC software company, for example. And I think that was a problem with WeWork, right? They tried to value it as a technology company, but VC doesn't really work for it. You probably should be doing debt or some other type of financing, right? Do you think the construction space is very similar to this or no?
Well, construction space is different from the consumer space because it's very business to business driven, B2B. And, in the case of, operating in the Middle East, majority of the projects are government funded. So it adds a layer of complexity when it comes to financing, collecting what is due, and so on.
Yeah. Okay.
When you're just dealing with the end consumer, right? Like when you sell them something, it's really much easier. You can predict when cash is coming in.
Yeah.
Like the moment they purchase it from you, cash is coming in, right? And then you can manage your growth based on that. But when it's a business or it's a government entity, that is the one who is supposed to pay you, you don't know, right?
Yeah.
Especially with COVID, Businesses are delaying payments, so I think that's becoming very, very common. And so if I were to invest in the B2B space right now, I'll be very wary of that. They are like huge. You may need to employ like
Great cash flow problems.
collections team, and so on, which are problems that you don't really face if you operate, B2C, for example.
Yeah, and to me though, that's the point I was alluding to. It does seem like this doesn't scale as nicely as a pure tech B2C marketplace where you just pour some money on, then the user grows, and economics kind of work with product market fit, right? It just seems like this is a lot harder problem, and but it seems that once you're in YC though, people put you in that category where they expect you kind of grow like that. So do you see this as a problem for Tendered, or do you think they've kind of figured it out, or it doesn't really matter?
Well, I think Tendered has figured out some parts of the business, but there are certain parts that they're still working on figuring it out. I have faith in the team, in the founder, that things will work out. The funny thing is, during the shutdown, like many economies shut down, construction was still going on in the Middle East because they had deadlines, right? So there are many mega projects that we were involved in. There's this Expo 2020. Now it's Expo 2021. In the UAE, and then in Saudi, there's a lot of mega projects going on as well, right? With the new leader in place, he has a lot of ideas, and so we're seeing like a boom actually in construction. So I think that part, is very positive, because you see a lot of money going into the space. But I would say for construction business, and because we're in the construction space, if we manage to raise, if Tendered, for example, managed to raise more money, we will feel the growth for sure. And to cite an example of Katera, basically they grew really fast, with the investment from SoftBank and the Saudi government. And because they had the connections, right, already with the Saudi government, all these large housing projects and settlements, they were given the contracts for that, right? Like just, so that's why they grew. And, again, it is a scalable business model because, they offer, I think, prefab, housing, right? So it's fabricated in a factory, and, it's not like you're going there and you're going to build it from the ground up, organizing labor and whatnot, right? It's totally different. It's all made in the factory.
Well, that's what they thought, but I think the further they went down the supply chain, they found out that it's very old school still, and they tried to end up building everything, and then of course it just didn't really work out. They put all the money into trying to build the whole supply chain, but a few $1 billion is not going to cut it.
You're give you an example, $1 trillion industry,
right?
I will give you an example. So in Tendered, we are in the business of hiring out machines, right? And so you might be wondering, like, what business do we have managing drivers, this equipment? These guys would drive the equipment, right? You may be surprised that we have to be very hands-on because, again, the performance, the productivity on the site relies on the discipline of these operators, right? So we call them operators. And we have had cases where, there were crashes on site, like the dump truck overturned. And then we found out that this guy was drinking on site.
Oh my God.
So,
my God.
Like, do you really want to go into like the intricacies of, managing the person itself? Of course, no. But you get to my point, right? Like, we are in the human rental business, but you have to handle the person too. So it gets very complicated at times. And then these are the things that operations have to deal with.
Yeah. I mean, like, if you're not a domain expert, like I have a little bit of experience understanding developers and kind of working somewhat closely to them. And man, the layers of complexity is very deep. Like the amount of people, like they just subcontract to subcontractors, and like you sometimes you don't even know what you're getting at the end of the day. So right. And then like as you know, a founder, sometimes you need founders who are brand new to the space to give a fresh perspective. But if they don't do the homework or ask enough questions or get to the real deep root causes of problems, you end up with kateras. So there is something to be careful to look at, I guess.
Right.
But I guess, like you said, is there something special about the founders or the YC company tender that gives you belief in them? Or why don't you contrast your experience for us, like, working at a YC company versus your Rocket experience, and what gives you this belief?
Well, there's less belief in burning cash to solve problems, right? Like you want to use the talent that you have, the brain power that you have to actually solve real problems. And I think that is really something to look up to, because, on the surface, we are operating a heavy equipment rental marketplace, but we really want to solve this construction industry, right? It's over reliance on manual labor, for example, right? And so we have actually invested into AI, automation, that sort of thing. We were developing in-house this AI algorithm that works with the video feed that we have to basically predict, like, okay, how long and how many equipment that you actually need, like how long these machines actually need to work on site, and how many equipment you actually really need on site. Because most of the time it's based on guesstimates, right? So the site manager or the project manager would say, okay, I think we need like 10 bulldozers and 20 trucks, right? And then it's all based on guesswork, right? Like based from the gut. But we want to use machine learning, and data to basically be precise about that, because at the end of the day, it basically impacts your cost, right? Like it's not only about the rental cost of these equipment. You have to pay for fuel, you have to pay for the operator. And, if you're late in delivering a project, you can get fines as well. So all these are the costs, which is why, in construction, you always see delays, and you always see, developers having to end up pay extra in fines. And those fines can be huge. Imagine if it's like 10 or 20% extra, right? So this is the problem that we really want to solve, but it takes a lot of time.
Interesting. Yeah. So essentially what you're saying is it's not a simple marketplace that like kind of we see in the flavor for the last 10 years in Asia, where if you just throw money, you acquire users, then you have something big. This is actually a deep tech hard problem. On a surface level, it's the simple operating marketplace with a take rate for for operating these equipments and renting them out. But at the end of the day, like you said, it's about productivity. But you need to use real deep tech and to do that. My follow up question for that would be: do you think what does the founders say about this? Is this going to be a piece of technology that you develop that's a feature of a larger construction company, so it's an acquisition target, or do they feel this is going to be a unicorn in the company itself that's going to be full scale powering construction?
Well, it's being developed towards, it's so what we're developing right now, because, in order to have machine learning going, you need to do your data collection, right? So we have installed all these cameras in most of our equipment,
telemetry,
right? And we have been getting data based on that, right? But the larger picture is that we want to sell it as a platform, as a SaaS in the future.
Okay. So how do you think about it then, because you were hired initially as a growth person to grow the company?
Well, initially I was hired as an operations person, and then when I went there, then they were like, I think you're better as a growth person. I'm like, okay, give me whatever you want.
I mean, I guess that's the problem with interviewing. They always try to typecast for a certain role, but they find out, you're better fit for something else.
It happens in startups, right? Like you have to be flexible, fluid, adaptable.
Yeah. So how did you think about it from a growth perspective, given what we talked about, the place to eventually build SaaS, these kind of hard tech problems that further you go down, it gets more complicated. How does one go up, especially at this is kind of early stage. You guys only raised about 5.8 million, right?
5.8 million seed.
Yeah, correct. Which is very early stages. 2020, I think. I forget. Yeah, maybe 1 or 2 years ago.
About 1.5, 2 years ago. Yeah.
Especially at that stage, do you guys feel you have strong product market fit? And if so, then how do you think about the growth? Or
Mhm.
how do you being transitioned from ops to growth person? How do you think about it?
Well, I think it's really, really complicated, right? So even
Yeah.
when at the time where I left, there was still a lot of unanswered questions. For example, right, like if we were to transition from being a marketplace to being a SaaS provider, would there be any takers, right? Because right now, people employ our services, on the basis that they need somewhere to move sand, to move certain
Yeah.
materials.
Yeah.
There's a lot of sand to move
I see.
in the Middle East, right? Like when you are building up a
Yes,
site,
it's all sand.
you have to move sand and you stack it on top of
Yeah.
other piles of sand.
Yeah. Yeah. All sand.
So I think that remains to
Uh,
be answered. I think there's a huge focus on SaaS right now because obviously we want to scale. So
okay.
unfortunately, I can't give that answer right now. Yeah, because I have no idea.
If you were to think about it, best guess, if you're pivoting to SaaS away from marketplace, is this product a bottom up or top down? So is it delivering it as a product for people to use, then more people adopt it, or do you have to sell it to the CIO, CFO, whoever is in charge?
Mhm.
How does that work?
Well, from my experience, it actually starts from the top down. So we usually would
Okay.
approach the CEOs, the C levels, right, to actually be selling
Yeah.
this vision. And then also let me clarify that this SaaS product actually includes the marketplace, because sourcing is
I see.
actually a huge part of the business that we don't want to see. Uh, you know, that we don't want to go
Yeah.
without. So we already have a huge database of equipment suppliers. We're just gonna offer it. You know, we call it SaaS, but actually the SaaS company is a marketplace from which they can source
Yeah.
the equipment.
So if I'm to read in between the lines,
Mm-hmm.
because my earlier question was, comparing rocket style companies versus YC companies, and it seems that you guys are still in the midst of figuring out very strong product market fit and what really works. And
Correct.
then you're kind of following the data. Then, like once you have the traction from executing on the data and hypothesis, if there's traction, then you guys will probably go raise, right?
Right.
And I guess what we saw in the past with Rocket is just that given this region lacks kind of infrastructure,
Mm-hmm.
given these arbitrage opportunities and business models have been deployed, just deploy a lot of capital, get a big kind of user base and figure it out later, right? Which is kind
Right.
of what we've seen in China, we're seeing in
But
Latin America now, right?
but
So
if I
that's
may
the
add,
difference.
right,
Yeah,
Rocket doesn't really have like a focus on B2B types of businesses.
that's
Because
true. Yeah,
for B2B, it's not like you step on a paddle and you pop marketing that it's going to grow overnight, right? It doesn't work that way
yeah,
because it's all based on connections, and multiple meetings, right? So I would share an
yeah,
example. Uh, in the earlier days when we tried to get this really reputable equipment supplier, right? So we drove all
yeah.
the way to Abu Dhabi from Dubai. So that's about 1.5 hour drive. We met with this guy, in the evening at, I think, 4 p.m. And we concluded the meeting at 9 p.m. So it was 5 hours just sitting there,
Mm.
like at first, the first hour it was like, okay, how's your family, blah, blah, blah. This is the whole culture thing, right? Like, and then you drink
Yeah.
coffee, uh, and the guy would smoke a cigarette, multiple
Mm.
cigarettes later, he'll be like, okay, I'll think about it. And that was the first meeting, right? So we had like
Yeah.
4 meetings before the guy agreed to onboard. The second meeting, he brought his
Wow.
mentor, this older guy, that was an
Yeah.
advisor to him. And the guy was like very animated. It's like, I don't think this business is good. I don't think we should rent machine. And yeah, that was the second meeting, right? And then a
Yeah.
couple meetings after, it was like, okay, I think I will try. I'll give you a few machines to test.
Yeah.
And that's how it goes. And imagine, right? Like that's just with one supplier, and even with the
Yeah.
customer is the same, right? It's not like in Asia,
Yeah.
like, okay, show me the benefit. Okay, I'm onboarding right now.
Yeah. 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 So that's the perfect segue. So working in the Middle East and working in Southeast Asia for so long, so that's a very good example, right? So is that the main difference you think you see, where meetings and businesses conducted and more in, I guess, I don't know, what do you call it, informal, or it's more like developing relationship first and feeling
Right.
and then doing deals? And Southeast Asia is more transactional, like if it works, we do it faster? Or what are you seeing in terms of differences between building startups in Middle East versus Southeast Asia?
I think it's less transactional. I think it's based more on a lot of referrals, because people whom, if you refer someone, it means that you actually trust that person, right? So a lot of referrals, how we actually grew our supplier base was through a lot of referrals. So we focus a lot on that. And it mainly stems from trust, right? Like, you don't trust someone if you can't trust someone, you can't do business with that person. And I think that has always been the case, right? Which is why, they spend hours to try and get to know you, because it's not only because of the culture, right? It's also because of there are huge implications if you trust someone and that person screws you over, because the legal system there works in different ways, right? Say, for example, you want to collect from someone who owes you money. As a business, it has to go through the whole legal process, and sometimes it takes up to like 2 years.
Wow.
Right? So if you, in the meantime, think about it. If your business, relies on this guy, most of the time you rely on this customer only, and he's not paying you. Could you wait 2 years to get paid? That is my question, right?
Yeah.
So that is why trust is a big issue over there.
I see. Okay.
I think that makes a lot of sense. But, again, the whole legal thing, I think it varies from companies to companies. It depends on how strong your case is. But in general, there's a different legal system over there,
Different legal in terms of making things harder to do the business, or does it also actually help with having the proper structures in place?
It's just different, right? So I don't know how to really describe it. I'm not a legal expert, but the way I see it, right, there are pros and cons, for anything. The pros is that the burden is on the person who wants to claim, for the money, right?
Interesting.
Like, you have to prove, so it's basically harder to do fraud in a way, but it's also easier to do fraud in many ways if you know the loopholes.
I see what you mean.
Right. Yeah. So we have, traditionally in the market, there are many contractors who delay paying suppliers because they know they can. So like the standard payment term might be 60 days after you work. So that's technically 90 days. So you need to have 90 days of free cash flow to fund every project. Yeah. And these guys might delay it to 6 months because they can. Right. So it's not so easy, which is why I think the only way is that you have cash, grow really fast.
That's an interesting point. So if you're building something in a space like B2B sales, I guess, especially big ticket sizes like machinery, it seems you would just need to raise more money than you probably think. To avoid these kind of problems. Working capital be massively important. And so Tendered was, like you mentioned earlier, was looking at expanding to Indonesia. What would be the differences there, working in Indonesia then versus, say, I don't know, Dubai, where you were based?
So we are operating on the ground in KSA, Kingdom of Saudi Arabia, as well as UAE. Whereas all the other markets, Nigeria, Indonesia, and India is all SaaS based.
Okay. Interesting.
Yeah. We thought that, if we set up a good base, we have customers lined up already who understands our product. It's much easier to bring the suppliers, the customers together later on. And I think, it is definitely a wise move. Well, it's not like we have like huge amounts of funding and can grow in every country right now, but I think it's a good start.
Any other cultural differences that were shocking working Middle East or Southeast Asia, or?
I can even give you in Africa, like in Nigeria. So I always thought that, okay, the sales cycle in the Middle East was pretty slow, especially
Yeah.
in Saudi, where it's much slower than UAE. And then when we went to Nigeria, oh my God,
Next level, huh?
it's really next level, right? So I would say the major difference is that uh, you know when you pitch ideas, you usually don't reach the managerial level, right? You will reach the
Yeah.
employee level, maybe an assistant manager and whatnot. And these guys are the most resistant guys that we've ever seen. Like they don't usually share new ideas with the managers, for fear of backlash, for fears of losing the jobs, versus in the UAE, for example, like we would pitch middle managers and they're always happy to arrange meetings with their founders, their CEOs. So I think that there is like a clear difference there. Also, in Nigeria, it takes a lot of time for you to travel. Traffic is bad.
Mm.
People
Yeah.
prefer face-to-face meetings because there's a lot of
Oh my God.
scams. Um,
Yeah.
Whereas in the Middle East, because of COVID, they're more open to doing Zoom calls. Like you have a call on
Okay,
the Zoom,
interesting.
like presenting your SaaS, your product, right? And they're happy
Yeah.
to entertain that. But in Nigeria, it's always like face to face. And then you have to show your ID card as well when you enter the company.
You're yeah, that makes sense. I'm sure they've had a lot of problems where people were pretending to be someone else and did something nefarious, right? So,
It
um, is there anything then across these three regions, Africa, Middle East, and Southeast Asia? When you think about in terms of doing an early stage startup or growing to a big business or scaling, are there any common strategies or proven strategies that work across all three, or is growing different across all three regions?
I think it's different. But one unifying aspect that you cannot overlook is getting the trust. And there are different ways to get trust in Asia, right? Like, for example, if you're talking about Southeast Asia, when you say that you buy something and you get something free, it's taken for granted, right? It's like, okay, everyone
Yeah,
gives free. When you go to
it's
the
baked
Middle
in. Yeah.
East, sometimes they say no, for example,
Just yeah.
right? And yeah, I mean, in Africa, they like free. So
Free, where's more?
it varies from region to region,
Of course, yeah.
by the end of the day, you have to do what it takes, whatever it takes to get people's trust. And unfortunately, it takes varying times, right? Like Asia is maybe faster. Like you said, right? It's mainly based on, okay, what can I profit from this deal, for example, right?
Yeah.
And then in the Middle East, it's not only about the profit that you could get from the deal, but whether or not this guy would pay me, right? So you have all these things. And then in Africa, it's different again.
Yeah, that's a good insight. Have you left Tendered, or you're still working with them?
I left 5 months ago, 4 or 5 months.
So what happened? You were jaded with Rocket. Or did you also become jaded with the YC company, or what happened?
Well, I wasn't jaded, right? So funny story is last year I wanted to come back to Bangkok, right? Because of COVID, I couldn't travel and I had to apply and go through the whole legal loophole thing, getting like a permit, come back here. And that took like a couple of months. So, I told the founder, right? And it's great. Like, he's like, you know what? Why don't you work from home? Right. So I'm like, are you sure? I mean, like, I'm not going to be in office, not going to be able to oversee the team and stuff. But he was like, go for it. So I did. And then, I realized that the work from home thing, it's not working for me. Like, I was working from home for, I think, a good 6 months probably. And then I realized that, hey, you know what? I'm not really adding much value. So I decided that things better that I just part ways.
Yeah. And you had some shares in the company still that you vested?
Yes, I do.
Okay. So I guess hopefully they continue to grow.
Yeah. I mean, like, I hope so. But I think the most important thing is that they have throughout the pandemic, they have been able to retain jobs. I think that was really important because, Uber, for example, I think, called Kareem in UAE, I think they were letting go of a lot of people. Yeah. So a lot of companies are letting go of people, during the pandemic. And I think, it's good that we're not doing that.
Yeah, no, it's good that they were able to continue operations despite COVID, because like everything here, construction completely halted. Things in Malaysia and Singapore are starting to finally open up. I don't know about Thailand. Are things opening up there?
Things are opening up right now, but the curfew is still in place. So curfew is like 9 p.m. to 4 a.m. So basically, if you're going to drink, you have to drink before 8 in a bar.
Okay. Oh, okay. Well, you still can go out at least.
Yep.
Okay, Chong. I guess for the last question, so now that you've seen all kind of companies. You worked at really big companies. You scaled big companies. You started your own companies. You worked for a YXC company. What's in store for you next? What's the plan besides consulting for companies, besides trading money and investing? What do you see yourself doing for the next 10 years?
Yeah, I mean, I'm actually also consulting for a cryptocurrency exchange here in Thailand. But I'm kind of putting that on hold right now because there's a lot of things going on. My core focus right now is actually managing the fund. So,
Okay.
I started really early in crypto, which is why I have the capital right now, and we are focusing a lot on decentralized finance projects. Not investing on the equity level per se. We're starting off by investing into the tokens itself. You can say it's speculating or it's gambling.
Okay.
It's fine. But that's what we're doing.
Yeah.
We have a good sized fund. But I think we will be branching out soon, being mini VCs and stuff. But I need to start by hiring an analyst. So I think it's really tough. We have interviewed quite a lot of people, but a lot of them don't know what crypto is. So it looks like I trade somewhat from the ground up. So yeah, it's going to be interesting.
My take has been that crypto is so big in Thailand, at least maybe in the entrepreneurship circle, that I feel it's sucking all of my friends who are based in Thailand into crypto. Like everyone that I know is doing some form of crypto now. So it's interesting that you point out that even new talent though still don't know. So it's just still the beginning of the tip of the iceberg still.
Right.
So and so what exactly did you want to solve? So you were managing a fund, but do you want to go deeper into actual blockchains and actual making your own coin, your own token, or building out infrastructure?
Right now with the, I would say in terms of regulation, there's not much clarity. Although countries like Thailand, like Malaysia, like Singapore have come out, to say that, okay, you could trade it. It's legal,
Yeah, correct.
But there's no clear framework, right? So I don't want to be touching that part where, I'm issuing my own tokens because I think there is a risk. And I'm just going to be focusing on investing, into projects right now, at that level. But, in the long run, I want to grow a much larger fund. So I think that is the goal. But what excites me every day is that there's a lot of things, that you can learn, in the space, especially, with NFTs. The funny story about NFT is that, so I work with another guy and we call it, we call it our team, right? So we have been investing in NFTs, I think, since the beginning of this year. And
very nice.
It's actually quite crazy, but we did not actually buy into the ones that went crazy, unfortunately. So I would say that it's still a stab in the dark for NFTs. It's not that simple. A lot of NFTs that are issued today, the prices are going up because of pure speculation. And so how to actually value these NFTs, we have not really figured it out. So that is the thing that we want to narrow down into the exact science. How do you actually value NFTs beyond views, right? Because how NFTs are valued these days are based on views alone.
Yeah, and NFTs, for the people who are not familiar with the crypto space, are non-fungible tokens. What's a real-world example that someone could understand easily of what an NFT is?
I'm not an expert in this, but you mean like a real world example of the
Yeah,
value?
how can someone conceptualize an NFT? Like, what is it?
Well, basically, NFT, as you know it these days, is pegged against a JPEG, right? It's a digital art. I think the most famous one is the one created by people. I think which sold to this guy in Singapore for $69 million.
Wow,
It's just
that's
a
crazy.
JPEG.
Yeah, yeah, yeah. What I realized, it's very similar to the art market. So it's highly dependent on supply and demand, and the reason why art market goes up so well is because if something's really chased after, there's only one painting or one piece of art that is in supply. So
Mhm.
naturally, people chasing demand if they really want it. And what I realized with NFTs is that, especially if you look at video gaming, like why do people pay for skins and all this kind of stuff? Because number one, you have a very big community at it. With the community, then it forms the economy, and with the economy, right, then people set the prices of what is beautiful, what's not beautiful, what do they want, why does someone spend a few $1,000s for the skin, why does this one only worth a few pennies?
Right.
And it's just it's how it's utilized within the community and the games.
Mm-hmm.
So I think the key is bridging the world of actual communities and real usage of NFTs in those communities.
Correct.
So if I'm valuing it, it's kind of valuing like art plus combination of community plus combination of what is valued in that community, and then who's the creator of the creator economy in that community to provide that artistic value, right? So
Right.
but I don't know. I also have not. I don't know anything about it.
But you know what is exciting is that what is actually coming for NFTs is the ability to collateralize your NFT to get a loan.
Yeah.
So I think that is
Yes.
that is
Yeah.
coming, and it's going to be very
Yeah.
exciting because one of the reasons why people are looking forward to this technology, right, is ability to collateralize your NFT is so that you could generate like cash flow of it. If you're a very rich guy, right, like you wouldn't mind just keeping
Yeah.
your NFT somewhere in a wallet, right? But if
Correct.
half of your portfolio is in NFTs, then you got to pay bills, right?
Yeah. And the infrastructure already exists, right? I mean, I don't want to get too deep in crypto. I mean, unless you want to go for it, but it sounds like decentralized autonomous organizations, DAOs, right? They already have the infrastructure based off the Ethereum for peer-to-peer lending. Exactly what you said. But I guess what you're
Right.
saying is they're building out the infrastructure for. I guess for traditional DAOs of peer-to-peer lending, you put money in of your coin, and then people borrow off that value, right? But what you're saying is that if you put my piece of art here, you could also lend off that and then make money and interest off that instead, right?
Right. And even right now, as we speak, I think this week or last week, they launched a couple of projects. They launched the ability for you to bid on these NFTs, therefore creating a floor price for all NFTs. So that
Correct.
creates a certain amount of liquidity in the market, because before people were like, man, this thing is going to zero, man. This thing is going to zero. It's going to be worth nothing. But it's not true now, right? Because you have people placing a floor price on all the top NFTs right now.
Well, what's happening is I mean, like, if you really think about how internet and mobile kind of unfolded, this is just like early day classified infrastructure, right? People are building that infrastructure even just to power the classifieds itself.
Right.
The classifieds itself was such an unsophisticated way to think about, how e-commerce unfolded and the complexity of that. So I think right now we're at the very, very early stages of early adopters, and it's just going to take a long time to get transparency, technology, infrastructure to understand to have real clarity on the mechanics of what is real supply and what's real demand at a very given moment in real time, right? And once, like you said, so once that floor price is there, and of course, there's always gonna have that layer of speculation, whether that be 1%, 90%, 99% speculation, but like at least you have some fundamental thing tracking that value over time that provides the basic infrastructure to then grow on top of it and build on top of that. So I think if we look at the next few decades of how e-commerce unfolded, crypto is going to be a crazy explosion probably, right?
I think so. And I think you spoke earlier about some of your friends entering the space. I'm not sure if they actually founded their own projects.
Yeah.
Okay. because right now developers are really really hot in this space, right? So
Yes.
you talk about like a really, really good developer, you're asking for maybe 400K US dollars, per year.
We're talking for the best of the best, though, right?
Like decently best, because even the lowest
Decently
developer,
best. Okay.
because the really good ones, they expect millions, right? So like 400K, I would say would be like the median expectation. And on top of that, an option to also get vested tokens, which probably will
get the coin,
right? So I think this is why it's attracting a lot of people to the space. But again, there's not enough people, experienced people, right? Like it's stretched pretty thin. So I think you can see a lot of people going to this space in the next few years.
I mean, we're even seeing this as a hard problem for software tech companies, consumer tech companies, SaaS companies. It's still technology talent, especially in Southeast Asia, is still stretched as stands.
It is.
So we're still very early days. So I mean, I guess also at the same time, I guess if you want to be a specialized marketer or if you want to be a specialized developer or engineer, right, it's probably a good place to start. Too much demand chasing too little talent again.
I think so. Yeah.
Would you be interested in investing in a crypto startup? Does your fund do that or no?
What kind of stuff?
My friend's building a wallet out of Paris, and he's looking to raise his next round. He actually had some pretty good crypto investors before.
Okay.
And they found some pretty good use cases around digitalizing the future of work, right? So you can pay like a freelance or you can pay your regular employees in crypto, and it's a wallet that kind of powers this.
Okay.
How do you think about those kind of opportunities? Do you do that kind of investing, or do you just do more of the trading side?
I think it sounds good, but I'm not sure. I have to look at the deck in particular.
Okay. Okay. Well, I'll pass it to you after this.
Like 80% of our funds are basically deployed into the tokens right now.
Okay, token space. Okay.
We are medium to long-term investors. We don't do the short-term over trading kind of thing.
Okay.
But I think for the most part, because we have entered the market since the end of last year, right? So I think we're in a really good position right now. I think you've seen like recent drawdowns as well, which we're not really concerned about. So.
Well, I think you're in a very good position. I still think crypto is so early in the stage, and you have a chance to become like a kind of VC player too. So like if you're medium to long term, if you get any windfalls, you could use some windfalls and pull it back to build out the, fund the players in the ecosystem for them to keep growing. So it's a pretty good virtuous cycle if you could manage to work that out, and maybe you'll be a big VC player in crypto in the future.
You know what VCs are doing these days? They are investing in these crypto projects, right? And they know that money is probably going to take some time to come back. And so,
of course,
these projects are then issuing tokens so that the VCs can sort of cash out.
So to give them liquidity.
Correct. So this is what's happening in the space right now, which is why, you can see like every Tom, Dick, and Harry project is issuing their own tokens, but 90% of these tokens, have zero value.
Does this lead to a bubble, or is this a problem, or is this good for the?
I think it could be a problem in the long run. And I mean, like no one knows how far this can go. In fact, we have seen like, so Bitcoin went to 60K, above 60K.
Yeah.
And then it dropped to like 29K, and people were like, okay, this is the end. And then it went back up again recently to 53K. And people were like, okay, this is the start of bull market, right? So like no one really knows. I think the most important thing for us, at least for me, is to invest in strong fundamentals, right? So companies that make money, projects that make money. I think that's really important for us. But in this space right now, like the most common thing that you hear is, I'm in it for the tech. So like, what tech, bro? Yeah. No idea. So there is a lot of speculation, definitely. Yeah.
I mean, it kind of makes sense. Everyone's still trying to figure out that answer, right? What's the thing that takes it along to the next level, and how do you keep compounding that? Then at some point or another, it becomes compounding. Then you're in the J curve where it's exponential, right? But the problem is you won't see it because you're in the middle of it. But by the time you see it, it's already too late, right? You missed the train, or you're hopefully riding it up, which I think you will be if you keep doing what you're doing.
Well, I mean, like there were some that we missed as well. but it's not all too bad. You
Yeah.
know, we had our gains already, but it's never enough, right? There was this meme that I came across yesterday. This whole meme economy right now, it's huge, right?
Yeah.
So,
of course.
As normal guys, like, okay, we just need like, a couple mil to retire, like have a good life. But these guys in crypto, it's like, if you don't have 50 mil, you're not going to make it. It was what the meme was about. And I was like, man, this is hilarious. And it's so true because, the insane amount of gains that you make, like recently, this one project, I think it ran like 10x within a month or something. And a lot of people were shouting about it, but we were not in that. So I guess we are the lead.
Well, yeah.
So my question back to you is, if crypto is moving this fast, right? And you can see the exponential gains. Now, do you think all the future startups will be in the crypto space, instead of trying to fix real world problems? Because I think this is a good example, right? Like why you should be in a crypto startup instead.
Well, I think the way I think about that, and I'm still exploring, listening and learning and talking to people, right? But the way the metaverse unfolds, right? The way that how content, media, VR, and even finance, like crypto, right? It's all gonna somehow bundle together. Crypto's just gonna be a part of that, right? Regardless, and if you think about crypto, it's just another form of fiat. You're just shifting one part of belief to another belief.
Correct.
I still haven't figured out the mechanisms of how that interacts in the real world. Like, what are the real world's effects of different types of monetary systems? I don't quite understand yet. Some people are convinced that you could just completely switch over. I'm not fully convinced that really makes sense, because if you're thinking about modern financial theory and how business cycles work, right? It's still an early experiment since post World War II. So it's like we don't even fully understand the repercussions of everything we do with modern fiat, and now you add into the mix of digital. How does that work? So, but I think it's an important facet, because on a technological level, and I've talked to other crypto experts about this, is that there is real world efficiencies to using digital currencies, right? It's just more efficient. You will save costs, because in the current system, there's just too much middle technology that's old, and that just adds to the cost of it. So you can't escape it. So I think in one sense you're right. You having some portion of your portfolio, if you're an investor, you probably need to be in crypto. So when I think about angel investing, I'm thinking, yes, I want to invest in my friend's crypto startup to get some exposure, right? I don't know if that's the right ticket. It's a lottery ticket, who knows? But I would like some exposure. So if you have a fund, let me angel invest in you, and then I get my exposure there. For traditional software startups, yes and no. I think you only worry about it to the point where time converges. So like, say if you're a traditional SaaS company, I'm talking to a lot of local players and crossover funds in Southeast Asia who want to build SaaS. And a lot of them are tied to these big corporate companies who also want to get exposure to their old technology that they want to update. Those companies don't need to worry for the next 5 to 10 years about crypto, because building SaaS is still so nascent in Southeast Asia. Like, it's the talent, the tech, learning the correct sales cycle, like having too much customer support because people want handholding in Asia versus the West. They just want to do it themselves. They want tools versus people, right? It's just a different flavor completely. So I think for the next cycle, for the next 10 years, it's not going to be a problem if you're not in crypto. You still can make a lot of money. But I think that, beyond 10 years, 15, 20, 30, you can't ignore it. That's a fact. The worlds are just going to converge where everything bundles together. And, if you're early now and you can find a way to be sustainable now, and you find out the right niche, you're probably going to have a crypto gold mine. I'm going to probably visiting your palace in Phuket and Bali or wherever you want to buy in the future. So that's the way I think about it. I don't know. Do you agree or no?
Well, I think with SaaS, it's kind of like a hit and miss, which is why, from a VC perspective, right? If you invest into a crypto project, it doesn't mean that they're using crypto. Maybe it just means that brand themselves as one, and they issue tokens. That is already a way for you to de-risk, because you cash out by selling the tokens. You're done. Like, okay, maybe you put in like 200K into the startup, and you've got like a couple mil, in tokens. So why do you care? Right?
I think there's two ways to think about that. One, that's just financial engineering. It's just people trying to get quick wins because they have too much money. They probably need to get a return for the investors to have to show that they've returned money to the investors to raise the next fund. The other way to think about it is that you could think of it as another form of market making. Right? So this provides liquidity to the market for them to actually use the money to kind of fund it, to get some type of terms on funding. Hopefully it doesn't blow up and become a bubble, which it might.
Mm-hmm.
But you can think of it as them being what bankers do to the modern financial system now, where they're market makers. They have their own books to trade, right?
Right.
But it provides the liquidity for people to use that money then to plow it back into infrastructure, plow into talent, real technology. Mm-hmm. Of course, you're gonna have the percentage of people who are scamming. That's just part of the game. But so that's the positive, negative, I guess you could see. I don't know.
Yeah, I think so. So I mean, that's how I see investing in startups. I think it's going to evolve towards that, but I'm not sure if it's going to take 10 years. Maybe it's much sooner. But I think what will pull back, what might hold down progress, right, will be the lack of talent, right? So I think we started the show by talking about the lack of marketing talent. I mean, performance marketing talent.
Yeah, correct.
Lack of developers in this region as well. But in particular, those who know blockchain, right? Those who can basically read Solidity, right? Which is the code for Ethereum. So I think maybe because of that, then it could stretch to 10 years.
Well, then, of course, talent, I think I completely agree with you. It's the same problem for the traditional tech startups, which a lot of people think about all these coding schools and how to make quick cash on those kind of plays, right? But not to go off on a tangent, but so then talent, yes, but then how do you think about the regulation piece, right? So there was one country in Latin America that banned it. China is fully investing in it. Malaysia, Thailand, Singapore are thinking about some type of unified infrastructure to start thinking about digital currencies, right? So how do you think about, of course, talent, I think, can be solved eventually. If enough money comes into it, people will flood to it. They're going to go through cycles of learning, then, just like how we are from 10 years ago now in Southeast Asia for tech startups. But what about regulation? How does that unfold? And what is where is it a problem and where does it accelerate?
Mm-hmm. Well, I think regulation is already here, right? The thing is for these regulators, what really matters is the ability to control the on-ramp and off-ramp. Meaning that when you are converting your Bitcoin into Malaysian ringgit, for example, right? Or into US dollars, that's what matters because they want to track you, how you spend your money. I think that is actually the core problem that they're trying to solve right now, which is why you've seen, for example, many exchanges taking off some trading pairs, when, it's maybe Bitcoin against ringgit, they're removing it, for example. It depends, right? And then again, I would basically attribute it back to the need for governments to control the on-ramp and off-ramp. Because with that, then they can also tax you.
Yeah, correct. Yeah.
Okay, why are they removing this amount of money? Then you have to justify controls and stuff.
Well, it seems that China's going to be the best suited for that. They have almost absolute control of your digital footprint. And,
right.
Europeans and Americans fight against that. They don't want the government to centralize that kind of power. Because but at the end of the day, though, if you want to control the distribution point, you need real world KYC. You almost needs to come from the government itself, where you need to be centralized from somewhere. Then you could tie the currency or the crypto to that. Otherwise, it just doesn't really work, right?
Right. Yeah, I think it's going to take some time for sure. But as an example of how countries like Malaysia and Thailand are currently like Thailand is specific, right? How they are taxing cryptocurrency traders right now is that, whenever you place a trade, there is a certain brokerage fee that's charged.
Okay.
That brokerage fee is taxed. So they put like a 7%, I think 7% value added tax on it. So that 7% goes to the government. And that's how the taxation is happening right now. Because
that sounds pretty efficient. Yeah.
I think that's the most efficient because it's hard to tell if you're making money from a trade.
Yeah, exactly.
Right. It's going to require a lot of oversight, huge government machinery. Whereas this, just putting a value added tax on it, it's really simple. And, you should see the amount of people that trade, daily fees that are generated, that's enough for now.
Yeah, correct. Yeah, I mean, for sure. And like what happens is that when the government really sees this as a real revenue source, then I think the regulation piece becomes more clear. How are you seeing that kind of happening in Singapore and Malaysia or other parts of Southeast Asia? Are the regulators up to pace? Are they taxing as well, or what does it look like?
Well, talking about regulators up to pace, I think Singapore is probably up there.
Yeah.
Simply because, okay, so there was this recent rumor. You know Binance, right? So Binance has been looking for a country that they can settle in, and there was news that
not China, I guess.
There was news that Binance was going to raise huge amounts of money from Temasek, in order to be listed there, and I guess to get a license to operate from there. And again, Binance is valued at what, $200 billion or something?
Something ridiculous.
Yeah, some ridiculous amount, right? And the founder owns like 90+% of the company.
That's insane.
So he's like probably almost the richest guy in the world. So anyways, then apparently Singapore was trying to woo them, right? And it makes sense. Like, I think in the future, countries will be trying to woo such companies, because think about the amount of tax revenue, the amount of jobs that it would create. I mean, like, who wouldn't want Binance in their country, right? So I think countries have to, like, you have to be friendly to crypto companies, and you need to have crypto-friendly policies if you want to attract them, right? So I think it goes both ways. But it kind of depends.
But there's the argument that crypto unlocks self-regulating autonomous governments themselves. Like, you don't need the government if you could have your own community, and the decentralization of crypto and blockchain allows that, right? Your own currency, your own community, your own way to run things. So, I mean, do you see that as being an impediment, or do you think the government has enough firepower to attract institutions that are part of the infrastructure that power crypto?
Right. So one thing about, so many new projects these days are no longer centralized. They are decentralized. There are teams across the world. And so many of these projects, they launch what's called governance tokens, right? So if you have their token, right, you get to vote on important decisions. And I think we're definitely moving towards that. They give you more control on the project. They don't necessarily dictate the direction on which the project would go. They have a basic roadmap, and that's it. Like, they leave it up to the community.
So that's the whole principle of a DAO, right? A decentralized autonomous organization. Okay, so that's what you're talking about. Got it.
But the DAO actually is, in its initial inception, it was much more simpler than this. Because in order for people to vote, there needs to be a community first.
Okay, yeah, exactly. But I think a lot of DAOs have formed communities, and they have these kind of influencer figureheads.
So, it becomes like any public listed company right now, but much better, right? When there's important decisions in the public listed company, say, for example, in Malaysia, board of directors will decide, right? And you as an investor, you have no right. Sometimes they may ask for your opinion, in annual general meetings.
Correct. So, but now everyone has, it's almost direct democracy. Everyone.
Correct. Yeah. That is the model that's been adopted. But I think it agrees a segue or what I wanted to share, actually, in which, crypto startups are becoming borderless, right? And,
correct.
And so if you think about it, right, the current startup infrastructure is very geographical based. So if you start in Singapore, you're going to be serving most likely the Singapore market, right? But and you're limited, right? Because when you want to launch a new country, you have to go there, you have to grow your team, you have to go through the regulations, you have to open a bank account. So can you really compete against these crypto startups, right? Even right now,
I see your point now. Yeah. I could see what you mean by you're saying is the future going to be crypto-driven startups. Because if that's the case, then, like I said, then you should flip your model from trading to actual doing crypto VC. Then, this gives another alternative for financing for customers. And it's almost in a sense where it's kind of crowdsourced, right? If it's decentralized and everyone's a part of this coin and you're getting money from the coin and you can convert it to fiat and then make real world businesses, you're not tied to a single type of investor base or an LP or interest of that sort, right? And then it's more like, does this community align with my values and can they fund me? And then the whole community will fund you, right? So that sounds like a very interesting world, and maybe that's something you should consider as a model then,
Maybe.
Yeah, you should just be a VC for, crypto VC, right? It sounds great.
Yeah, but VC doesn't have a nice sound to it, and it's not liquid investment, right?
For now. So of course, I think there's a few steps to liquidity and exchanges and regulation, but it seems like the next logical projection.
I mean, I cannot bear thinking about the idea that someone is going to use all the funds that I give them in Facebook marketing and Google marketing. So I feel very sad.
That's because you're the marketer. Well, yeah, you're feeding FANG, right? And then which tells you that FANG, despite the valuations, the PE ratios, despite everything, dude, they're still going to grow even more.
It's not crazy because every Tom, Dick, and Harry, right, who's raising money from a VC, they're going to spend on Facebook and Google.
Correct. That's true. Well, so what's the alternative to the future then? Where should founders be? Is crypto blockchain the answer where there's different communities we can now market to acquire users, or how do we get off this?
My opinion, I think it goes back again to creating your own community. So regardless of what you're selling, if it's blockchain, if it's a crypto product, or even cosmetics, right? You need to have a community.
It sounds like YC Bible here, right?
I'm not sure if it's YC Bible. I'm not sure, but
No, you don't think so? Okay.
You need to have a community, right?
Yeah. Okay. No, I think I agree with you. And then I think, that's what, right? Well, if you think about the Peter Thiel framework of how you build the monopolies, right? It's coming down to, is it scalable? Is the brand, right? If you have the brand around it, unique technology that no one can copy, right? So if you think about that, community is in a sense one of these brand moats. And, if you start there, I think there's nothing wrong with that. So makes sense to me.
Right. I mean, if you think about it, then going back, it's basically going back to the basics of business, right? If you have a shop that you want people to come and frequent, right? It's always about a community as well. And community comes from happy customers, right? So maybe citing YC again, having 10 happy customers is better than having 1,000 customers.
No.
I don't know.
And I think the philosophy that turns that on its head, though, is what we see the crazy aggressiveness of successful tech companies in China, like the Mate ones. Because I did this in my other podcast, The Level Barbarians, but do you know what the largest segment of revenue for Mate One is? The food delivery company in China? What is their largest segment of revenue?
I don't know. Gaming?
It's travel.
Travel.
Right? So it's not food delivery. They're known for food delivery, right? But they make most of the money from travel. So what I'm saying is that I think China works really well with that. And what I'm realizing is because there's just the infrastructure is missing. So when you have a user base, you can do things with it.
Right.
But that doesn't really work in YC. You're not going to start a food delivery and say you're going to do travel because the travel guys are just going to laugh at you and destroy you probably. So,
it's hard to pitch to investors as well. Not only even not only YC, but every other investor out there, right? Say for example, we had this business that's ongoing, like a rentals marketplace, and then suddenly we want to do SaaS and we want to do logistics. They're gonna be like, so what do you want to do?
Yeah, exactly. Well, that's exactly what it sounds like. So it's interesting because you're a YC company, but it's interesting you're looking at marketplace and then SaaS. It's because traditional advice from the West would be focus on one segment and one model. Don't do multiple models. The only person who pulled it off was LinkedIn when they were pitching Series B. They said, I'm going to do all these models.
And we have logistics as well, by the way.
There you go, right? So maybe, there's this convergence where to me, it's more of a globalized play. If we do globalize it, we don't decouple to two different Cold War of China versus US, right? If you still want to have global trade and growth together, it kind of makes sense where you do get user base and you want to try to find ways to increase LTV by other segments that add value to your customers, right? So, but I mean, it doesn't. I think it's not like one or the other. Like it doesn't detract from the fact that you're right. You do need community. You need actual value. You need actual wealth, right? But I think the extension of that is how else can we bring even more value, at scale, right? But the question is just like, do you do it backwards, top down, or bottom up? I guess, and I think we see success on both sides. So I think there's no right or wrong there.
I think so.
Okay. Any final words? Do you want to plug anything? Should we follow you, or if someone wants to connect with you, how can they reach you?
Don't follow me.
Yes. Chong was doing this as a favor. You're very low profile.
My social media, it's pretty quiet anyways, so there's no point not heavy into it these days.
But you do a lot of crypto advising. So I guess if you're in the crypto space, you'd be interested in talking to crypto people.
I guess, but I haven't, to be honest. Okay. Because my experience in the past, right, dealing with crypto people is there were a lot of scammy ones. So I just decided, okay, I'm not going to reply to anyone. But I'm pretty sure these days it's much better.
Yeah. So what I'll do after this is connect you to my other crypto friend, and we'll make sure we get only the clean and the best deal flow, so that there's no more scammers coming across the horizon.
But to that point as well, I think connecting is always interesting. It expands your mind as well, but you also have to figure out like if you could do anything together, right? Like you kind of have that kind of obligation as well, like to find ways to work together. I don't know. That's just me. So I think that's why I've been quite silent in this space.
Yeah. Well, look, you got to go to another journey, right? You got to find out what you care about, and it seems that you do care about the crypto space. Otherwise, you wouldn't be running this crypto fund, right? And I think if you just keep going at it over time, you'll filter out the noise and you're going to hit on something good. So it's just a matter of timing and focus and just doing one thing really well, which I think you're on that path. So I definitely think you're going to be very successful, and I'm very excited to see what the future brings.
Inshallah.
Okay. All right, Chong, thanks for your time today.
Thanks, Alex. Talk to you soon.
Okay. Bye.
Bye.
Hey listeners, thank you for listening to Chong's episode. If you enjoyed the content or learned something new, please share it with your friends and family who would benefit, and give us a review on your podcasting platform of choice. So what did we learn today? After some reflection and thought, and after listening to Chong's episode again, it's pretty clear that Rocket Internet and YC both are able to breed successful and high-quality founders. You can see that many current founders these days are blending ideologies from both camps and are building bolder new startups. I personally think YC is still lagging outside of the US, but it's a matter of time before they catch up with some successful funded companies that bring exits to the emerging regions in the next 10 years. Also, there seems to be a covenant where marketing for growth-oriented companies often end up going to Facebook and Google anyway, and there's a large premium for marketing talent despite all the exits and development we've been seeing in the past few years. We are still very far from having a mature ecosystem, so it's important to keep building and investing continuously into Southeast Asia and solving those hard problems. See you guys back here for next week's episode. EOA out.